Welcome to the Restoration Pros Unplugged podcast. In each episode, we're going to bring you insightful interviews and discussions with top restoration industry leaders. We're also going to delve into their business, the strategies that made them successful, and most importantly, the valuable lessons they learned along the way. I'm your host, Clinton James. I'm also the Chief Marketing Officer at Water Restoration Marketing. We're a digital marketing agency dedicated to helping restoration companies nationwide secure more high-value water jobs. Now, this show, it aims to provide you with the knowledge and tools you need to excel in the restoration industry. So sit back, relax, and enjoy the show. All right, everybody, welcome to another episode of the Restoration Pros Unplugged podcast. I am your host today, Clinton James, Chief Marketing Officer over at Water Restoration Marketing. And today we're talking financials. We're talking money. It is great that you build this business, this restoration monster that is taking care of you, your family, your employees, and servicing your community. But if you do not have your ducks in a row in terms of your financials, it won't be a legacy business that you're able to leave to your children and your children's children. It won't be a business that you'll be able to sell to private equity in a few years there. So with all that being said, I brought on an awesome guest to talk to us today. This is Nikole Mackenzie of Momentum Accounting. Nikole, say hello to the audience.
Hey, Quentin. Thanks for having me. Appreciate you having me on. Hopefully, I won't bore your audience too much. I promise to keep it high level, and I promise talking about money is fun. Okay, go.
Money is fun. Money is important. So for everybody listening, get a notepad out, take some notes here. So Nikole, before we get started, give the audience a little background on yourself and Momentum Accounting.
Yeah, sure. So I've been in the accounting industry for 15 years. After college, I went and worked at a CPA firm. And at that time, there was really only one path for an accountant, and it was to go work at a CPA firm, work a lot of hours, hopefully become partner one day. And after I had got my CPA license, been there for 6 years, I found myself looking around thinking like, man, I don't think I want to do taxes the rest of my life. This kind of sucks. I did, however, love working with business owners. I love the finance part of it, and I loved helping people. And luckily, the timing worked out really well where there was a big change happening within our industry. So there's this company out of New Zealand called Xero, Xero, that built one of the first cloud-based accounting softwares. And in response to that, Intuit, you guys might be familiar with QuickBooks, historically, yeah, which historically they all had their desktop product responded with their own online product, QuickBooks Online. And so that created this huge change within the accounting industry where there was this whole nother career path that we could now do because historically small business owners, the way that they were able to do their finances was like they had a spouse or office manager or in-house bookkeeper who would do data entry, and then they would give their financials to their tax accountant once a year. They really had no insight or anybody helping them with financial decisions, with cash flow, with you know wanting to sell their business, or if they want to get a loan. There was this huge gap there, and the cloud tools gave us access into small businesses that we just didn't have before. So the firm I was at saw that they were one of the first firms in the country to add on this model, and internally or in the accounting world, we call it CAS, Client Accounting Services, but basically it's outsourced accounting.
So,
And what that means is rather than hire an in-house bookkeeper or controller or CFO, you can outsource that to a firm like mine. So I was at that firm for 6 years, ended up leaving, decided I want to start my own business and I wanted to focus on that instead of doing the tax side of things. And so that was 10 years ago now. And actually, my first client was an ex NFL football player, Ronnie Lott, if you're a 49ers fan.
I live in the Bay Area. Of course I know who Rob
Yeah.
is.
So that was super fun. Th- well, initially the name Momentum Accounting, I thought I was going to work with professional athletes because I was always played sports, and then realized that they're a little bit challenging to work with, not exactly the most scalable thing. So I ended up deciding to focus on small businesses. So I started my firm, yeah, just coming up on 9 years ago, and we have a team of 11. So five of us, actually, no, seven of us are in the US, and then we have four in the Philippines. So we service our clients 100% remotely. Although some of our clients that are still on paper-based systems, when I first started the business, we would actually go physically to our clients' offices and set them up so that they could actually outsource it to us. Most of our clients nowadays, especially since COVID and everyone's sort of familiar with Zoom, we can do everything remotely. But at a high level, basically what we do is we charge a fixed monthly fee to be your accounting department. And that could mean that you have an in-house bookkeeper and we supplement with a controller and CFO role, or it could mean that you have nobody in-house and where you can be your bookkeeper controller. And then it just really scale up with our clients depending on what their needs are.
I love that. And for our audience, which is filled with restoration professionals, the reason that you and I connected is because you have experience specifically working with restoration businesses. So tell me a little bit about why you got into the restoration space.
Yeah, I'll go back one step to just share an initial story of a client that led to the restoration space. But early on, one of our first clients was a security staffing company. And this is a $10 million business in San Francisco. And it was founded by the dad in the 1970s, family owned business. For many years, he ran the company. And then at one point, he passes away. So one of the daughters takes over running the business. And at this time, mom is still partially owner, but not involved in the business. And at a certain point, she stops getting distributions. Like all of her retirement is wrapped up in this business. She's not getting any money out of it anymore. Long story short, turns out daughter is stealing from the company. She's buying condos in Miami and Disneyland trips and $10,000 Gucci bags running through the business, basically stealing from her own mom.
Oh,
So, we come on. This is one of my very early on clients get referred in by the forensic accountant. And at the time we came on, the company was like one payroll away from bankruptcy, wasn't sellable, was on old system, had no financial statements. And so my team came on and we just do what we knew how to do. Like, we'll help you set up your systems. We put together 2 years of financial statements. As we start going through the financials, we realized that the health insurance as a percentage of their overall labor costs kept going up. So we looked into that and realized for 2 years, nobody was removing the employees off of the healthcare plan when they exited. So they were paying $15,000 a month extra in health insurance costs for employees that didn't work there anymore or even had been deceased. We went through and found another $10,000 of just extra software subscriptions they were paying for they didn't use for or weren't using. Also, while we were working for them, we got them $3 million in PPP loans. Shortly after that, one of my team member Jen, who's doing the book, started seeing these like 99-cent transactions, like hundreds a day transactions coming in through the bank account. And we ended up finding out that one of the employees was using the American Express card to look at webcam girls on the internet, had uh,
God. Okay.
yeah, had racked up $400,000 in the matter of 2 months.
That's insane.
And so, luckily, because we were there as a professional overseeing everything, we were able to find that. Had we not been, right, then they would have been stolen from yet again. And so, after 3 years, the other thing that we did was their customers, it was taking them 60, 90 days to get paid. So we implemented some technology so they get paid faster. So after 4 years of working with them, we ended up infusing an extra $3 million into their business and through improved profitability, improved cash flow. And then ultimately they're able to sell the business for 3 million bucks. So that I talk about this story and I share this story because this is why I do what I do. And this is the impact that we want to continue to make and help small businesses with these things. So how this ties into the restoration space, I'll get there. So, we've got a portfolio of about 45 monthly recurring clients, and we onboard a couple clients a month. So this guy Zach I'm in a or was in a business group called Entrepreneurs Organization EO, and so he was in that group. He reached out to me because he needed help with their accounting. So again, family owned business. And when I looked at his financials, so I'd never heard of the restoration space, didn't know it was a thing. I get his financials. At this point, I've seen over probably 1,000 sets of different financial statements in my career. And I'm like, what's this type of business? And then I saw in 1 month he had made he had this, like, $1,000,000 transaction that he made in a week, and I was like, "Did you make $1,000,000 in a week?" He's like so anyway, I did a lot of research into the space, and he ended up referring us another client who we came in, and one of the something that happened with them, the client that he referred us, is that the business partner we went through and we're, like, doing a bunch of cleanup, business partner was stealing from the company. So, anyway, long story short is that what we found within the restoration space is they're very similar to that founding story that I was sharing with the security staffing company, where they're really good at what they do in terms of, uh, help servicing their customers. But because they're out in the field, because they're focused on that, there's nobody really watching their back office. And so momentum accounting, what we're really good at is coming into situations where things are a mess, implementing better technology, installing a financial operating system so that the business owner has financial transparency in a way where they're not having to necessarily manage the process, but they can get data pushed up to them so that they know they're not being stolen from, that they know that they're profitable, they don't have cash flow issues, they know they can make payroll, and then if they get to the point where they wanna sell their business or they wanna get a loan, they have really clean financials so they can go be able to do that.
That makes a lot of sense. I talk to restoration companies of all size, right? Some of the clients that they come to me, they're really in the infancy stages. I'm talking owner operators that do everything from answer the phone to go out to a property to sell the job to set up initial equipment, manage the team that's doing the restoration or mitigation services. They also have the bookkeeper, right? They also do the marketing for the business, right? They also are the HR person. So I could absolutely see a business owner in the restoration space not having the bandwidth to actually keep track of the business development rep and his credit card, that he's out entertaining plumbers and adjusters trying to get business there, right? He can't possibly keep track of every single transaction for every member of the team. So it's great to have that kind of resource as a restoration company outside of the office, keeping tabs on everything.
Yeah, and I think there's and I get it too. Look, I'm an entrepreneur, I'm a business owner too. We're so focused on sales and revenue coming in that sometimes we sort of ignore what's happening on the back end. And so a lot of times what happens with a lot of small businesses and restoration specifically is you hire uh your spouse or an office manager or another family member to do the books. And while that may seem like a good solution and could be a good solution when you're small, what I find is usually when you hit around $1,000,000 in revenue, you start to feel whatever solution you have in place right now isn't working. And that's typically when you're starting to feel the need of what's called a controller. And a lot of small business owners haven't heard of the term controller before. They maybe have heard of bookkeeper and CFO. So I'll just define what the different roles are. So the best way I like to describe it is a bookkeeper tells you what happened,
Okay.
a controller tells you why it happened, and a CFO tells you what's going to happen.
Now, what kind of role can momentum play for a restoration company in terms of those roles? Or can you do all three?
Yeah, so we could do all three. We do like you to have an internal accounts receivable person that's managing client relationships, following up with collections. But what we'll do is anything touching QuickBooks Online, we wanna be the one that's in there that's categorizing transactions. And then we also wanna be the one that's coming in and understanding your business model, understanding your, for restoration companies, right? Like, what sorts of service lines do you have? Or is it commercial? Is it residential? Is it water damage? Is it mold damage? Am I doing pack out? Like, what are all the services that you're offering? So we can start to tell that story on your profit and loss statement. So you can see here's the revenue from each service line. Here are the costs associated with that. And the other thing we want to do is we understand your direct costs, which is those are the people that are actually servicing your customers, right? Your subcontractors, any material versus your overhead costs. Your overhead costs are, your rent expense, your accounting fees, your HR, kind of the infrastructure of your business. That starts to build the model of your business so you can start to figure out what the margin should be in each of those areas. So I have this thing called a 50/30/20 rule, which is typically you want no more than 50% of your direct costs to be or sorry, no more than 50% of your revenue to go toward direct costs. That leaves you 30% for overhead costs, and then that leaves you 20% net profit after you pay yourself as the owner. And so, obviously, depending on what type of services you're doing, if you're doing commercial versus um, emergency type stuff, your margins might be different in each of those areas. But overall, we want to start setting targets in those areas because you can track your margin and you should be tracking your margin by project. But the ultimate reality is what actually trickles down to your profit and loss statement. That's your source of truth. And so if you look at your P&L and your gross profit is 40% or 30%, that's not leaving you enough to run your business, to invest in marketing, to invest in salespeople. And so fundamentally, we need to figure out like, are we paying too much for employees? Are we being inefficient? Are people unutilized? Are we not? I mean, unfortunately, you guys don't have a lot of leeway on pricing like other types of businesses do. Uh, but but there's always inefficiencies or things that we can pull out when we're looking at that data on a monthly basis and combing through it, figuring out, okay, what change now do we need to make in the business in order to get back on track?
I love the way you phrase that because cash flow is always an issue for restoration companies until they sit or hit a certain level, and then it becomes a bigger issue based on project size, right? So
Yeah.
having someone like you to not only get the books in order in terms of historical data, but that historical data allows us to project out a little further and make better decisions about the projects we take on or the investments that we make in infrastructure, manpower. Do we want to buy that building or do we want to lease that building? Right? So I guess these are all things that having a really good partner helping you look at your financials and evaluate when is the right time to make those kind of investments, right?
Yeah. And to that point, a growing business will always eat cash because you have to spend money to generate revenue. And if you're growing, your revenue is going up, which means your cash is always following. So the way we service, and going back to our first restoration client that we started working with, I didn't really go into what we do for him, but the way we service him, we actually have three people on our team that work on his account.
Yep.
So we have Ashley on our team on a weekly basis. She's going in and updating, entering all the bank and card transactions that come into QuickBooks Online. And then on a weekly basis, our CFO, we have a scorecard, a finance scorecard that we have a live feed. We have a tool called Live Flow that basically takes QBO data, pushes it into Google Sheets. So they have a Google Sheets scorecard that they look at on a weekly basis, mostly around what's an AP, what's an AR, or AP, sorry, being what do we owe our vendors, accounts receivable, what do our customers owe us? Is there anything in progress that we haven't billed for that we need to bill for? How much cash is in the bank? What are our credit card balances? So, like very basic things that a lot of owners aren't looking at on a weekly basis. And what ends up happening is either a customer doesn't pay, and then you're calling or walking into the office of your accounts receivable person being like, "Why did this go out?" But by that time, it's a month later and you didn't make payroll. And so it creates these routines. I call it like pull versus push. So a lot of times as owners, we're like asking people for things rather than it being pushed up to us on a regular cadence. So that's the weekly routine. And then on a monthly basis, our controller, and that a controller is a higher version than a bookkeeper. It's usually a formally trained accountant who's gone to college, who understands GAAP accounting. The controller is coming in, doing the month-end close, looking at variances, comparing budget versus actual, comparing trailing 12 months data. If something went up a lot or went down a lot on an expense line item, drilling in and figuring out why, and then sitting with the business owner on a monthly basis and going through those financials.
I love that.
So
What's that
month
third level?
And then the third level's the CFO. So the CFO and, so people know CPA, right? CPA is a designation, certified public accountant. CFO is not a designation. A lot of people think that CFO is a designation. It's not. It's just like it's a title. So it's like a CEO, a COO, and it's chief financial officer, and chief means that's someone that's part of your leadership team. So, Peter is the CFO that we work with at Momentum, and he's in his 60s. He's worked with tons of different businesses. He's more strategy focused. So initially, when we started working with Zach, Peter was not involved. But then Ramona, our controller, kept coming to me and she's like, "Hey, Zach keeps asking about doing acquisitions and he's wanting to expand into different locations." So those are signs that it was like, okay, our accountants are more historical looking, right? We're putting everything together to do analysis, where the CFO is working with the business owner and saying like, "Hey, what do you want to do with this? Where do you want to take this?" And then Peter is helping him plan that out. So if you want to acquire a business, what does that need to look like? Let me help you look at that. Let me help you look at these deals together. He wanted to expand into a different location, so Peter helped model out what would the investment need to be in order to do that based on the assumed profit of each location, how long it would take to ramp up. And then on our side, on the accounting, we're like, okay, how do we, if he wants to hire general managers for these locations, how do we show a structure, a P&L so that these guys can get comped on the performance of their location? Well, then we start to implement Ramp, which is a software that we like to use. It's a spend management software. We can actually have controls, like give people virtual and physical credit cards that are associated with their particular location. So then at our end, it helps us track what expenses go to each location. So then we could give Zach the information he needs to then do a bonus plan for those particular general managers. So it's the system that all ties together.
I work with a lot of restoration companies that have multiple locations. They've got a general manager that manages each one of those locations. They're usually in a city with an immediate service area there. And you're right, they all have different expenses, and the overhead for one location might be dramatically different for another location. So um, I'm sure our audience is listening to this and thinking, man, if I've got to hire a bookkeeper, if I've got to hire a controller, if I've got to hire a CFO in house, that's huge overhead. So, talk a little bit about the advantages for a restoration company looking at outsourcing to somebody like Momentum.
Yeah, good question. So we found that like holistically our costs end up being around 2% of revenue, whereas when we look at the cost of in-house, it ends up usually being 3 to 6% of revenue. And how we do that is first we come in and we automate what we can. So a lot of times your in-house accountant or in-house bookkeeper or relative are great at the process side of things, but just like you guys in the restoration space go to conferences and learn about the latest technology, I do that in the accounting space. Our team does that. So we know the latest tech. So we come in and we automate everything that we can. So we want to eliminate any checks that are being written. A lot of people are still writing manual checks. That takes a long time. So we implement tools like bill.com or Ramp or Row. Those are all like bill pay software. So the idea is that we're automating the bill pay process and digitizing that. So that can save a lot of time. On the payroll side, a lot of times people are doing like uploads to like the 401k and the health insurance doesn't integrate with the payroll software. So there's a lot of manual uploads or somebody updates that has a baby that doesn't get updated in their payroll withholding, right? So there's just a lot of balls in the air that get dropped or things that are being done manually that we come in and automate what we can. And then from there, right? So, like, let's say you're $1 million restoration company, you may not need a lot of the controller. May be just mostly bookkeeping work, and then we'll bring in 2 hours of controller oversight. And we're only doing the accounting piece. If you think about your in-house accountant that might be wearing a whole bunch of different hats, or if they're on maternity leave, or if they're on PTO, like all the times that they're not actually doing work that you're paying them for, we're only being paid to do the very specific thing that we're doing, and then it frees up your internal staff to be doing more value added work because ultimately, like, you're not a finance person or an accountant, so for you to be able to manage somebody in that role is really difficult because you don't know what good looks like.
It's a great point.
Yeah, and I will say also, like, we're happy to if you have somebody in-house that's great at paying the bills and sending out invoices, we're happy to layer on top of them and manage them for you as the controller role or CFO role. So it's really about having those 3 roles, and depending on a smaller business, you may not need a CFO yet. A bigger business, over 10 million, eventually you might need to hire a full-time controller, and so we've usually bridged that gap up to, like, 12 million in revenue, And then after that, we're like, "Hey, let's help you find somebody in-house, like, you've outgrown us, that's great, we're happy that you outgrow us."
I love that. So for let's say we've got an audience member listening, they own a restoration company somewhere here in the US. They're doing, let's say, 1 to 3 million. And so far it's been him, his wife, and a bookkeeper that they have that really do everything from a financial standpoint. What's the process if they came to you, Nicole, and said, "Hey, we're interested in working with you"? What does that look like for that restoration company doing between one to, let's say, 1 to 3 or 1 to 5 million?
Yeah, sure, so it start with just an intro call, make sure we're a good fit, understand the challenges of the business. And then from there, we move into our discovery phase. So for their discovery, we have like a 72-point checklist where we go through everything. So we look at their technology stack. We look at any risk around spend controls to make sure that nobody has direct access to move money out of the bank account. We look at loans on the balance sheet to see what interest rates they're paying. We have a client right now that we're working with that came to us with like these really, Amex and PayPal loans, and so we're working on get to the point where we can restructure those with a bank so they can actually get a real bank loan. We'll go through their profit margins. We'll go through how long it takes customers to pay. We'll look at who's involved in their accounting process. So breaking down the AR process, the AP process, the payroll process, um, and then and then after we go through our discovery, we present our findings. And so we say, here are where the gaps are. Here's what we want, where we think you guys can continue doing what you're doing. Here's the technology we think we can help make you more efficient, save you 10 hours a month. And then if they want to sign on with us, that's when we do the implementation. So usually this first 60 days of working with a client is when that's where the magic happens. That's when we're cleaning up all the old crap. We're cleaning up the balance sheet. We're setting up the financials so they actually tell the story of the business. We're implementing technology. We're implementing controls. And so we actually have a designated onboarding team that just does the implementation. And again, so because it's a huge spike in work for us, because that's when we're very hands on. And then we actually put together SOPs and documentation about the accounting process that then gets handed off to our ongoing team. And then we have, um, a project management software where we put in, here's what we're doing on a weekly basis, a monthly basis, quarterly basis, annual basis. So we basically systemize your accounting department so that there's no single point of failure. So again, if it's like somebody gets hit by a bus, your person's out on maternity leave, or they just quit, right? Every time that happens and you have an in-house person, now you got to go find somebody new and it's disruptive to your business. Whereas we had a client or a team member that left early last year. Guess who had to deal with it? We had to deal with it. Our clients did not, they had no disruption in service, right? Because we have redundancies and backup and documentation. So they did barely notice that this person left. So it's on us, not you, if a team member leaves.
I like that. So once that 60 days is completed, talk a little bit about the ongoing cadence of communication between your team and the restoration business.
Yeah. So basically, most of our clients, well, it depends on the size. At a minimum, we're meeting with you on a monthly basis. For our bigger clients, it's a weekly touch points. So weekly, like I was talking about, was that finance scorecard or some sort of AP meeting, depending on if you're working with a CFO or not. But at a minimum, on a weekly basis, we want you looking at cash in the bank, accounts payable, accounts receivable. And then on a monthly basis, that's when we're doing our financial statement review with you. And then if you have a budget, so once we get the foundation set, then we can work on forecasting or budgeting with you. And if once we get that built out, so we usually like to do that around like November. And then that way it can be revised, finalized, and then we'll import that into your QuickBooks Online. And then every month we can look at your budget versus actual. And then every quarter we want to reforecast that. So you set it at the beginning of the year, set your intentions for the year, and then every quarter is when you do your planning, and we'll update that based on what you think is going to happen next quarter. And then every year is now you got to file your taxes. So we get everything in a nice package. We don't do taxes because I don't want to deal with tax season. And so we take that nice tax package and we send it off to your tax accountant, and they do that. And then, of course, you have 1099s in January that we can help with too. So that's sort of the rhythm or so of the accounting and finance function.
So I think it's really important for our audience to understand that if you're actually managing the financials of a restoration business that's over $1 million, hell, even some that might be $750,000 or half a million, there's a lot of complexity, especially with the ebb and flow of cash flow in the restoration space. You may do work today, you have to cover labor and material costs, and you may not see a check from that job for 45 to 60 to knock on wood. I hope it's not 90 days, but there's so much nuance to managing cash flow in the restoration space, and I think it's great that restoration companies have a potential partner like you that understands not just the accounting side, but you also have experience working specifically with restoration companies, so you understand their challenges. One of the things that I tell my clients when they're looking at me as a digital marketing agency to work with is I am not a generalist, right? So I'm not working with landscapers or dentists, and I tell them whether they work with me or not, they should go and find somebody that has experience working with their type of business, right? So the fact that you're working in the restoration space, you've got clients, you're doing that work right now, that's awesome. I really think that's great for our audience. Now, you mentioned automations, and because I have a completely remote agency, half my team's US, half of it's offshore, automations, software, all of that stuff is absolutely in my wheelhouse. So tell the audience that's listening right now about software and automation recommendations that you have that they should potentially be looking at to streamline their processes and put them in better financial position.
Yeah, sure. So talk to you about our core app stack, I call it. So uh, if you think about at the core of it is your accounting software. This is your source of truth. This is where all the data needs to end up. So we recommend QuickBooks Online or Zero for that. Those are the two major cloud-based. If you're under, I know you're getting up to 12, 15 million in revenue, you might be looking at an ERP system. But for our smaller businesses that we work with, we only work on QuickBooks Online or Zero. Zero is a competitor of QBO. The only limitation with Zero is it doesn't integrate with some of the apps like QBO because it has bigger market share. And when I say QBO, that's QuickBooks Online.
Yes.
You need to get off QuickBooks Desktop.
I didn't even think they made that product anymore. I've been on QuickBooks
All right.
Online as long as I can remember.
I was at a co-working space yesterday and I'm like looking at all the windows and I saw 3 QuickBooks Desktop on different offices come up. I'm like, "Can I go in there and help you?" Um, The challenge with that is if you have an in-house person, accountant, bookkeeper, they're comfortable with that tool. So that is a discussion you need to take to make because a lot of times that person may be a good accountant. They're not ready to move. They don't want change, right? Because then they have to learn a whole new software. So that's sometimes the sticking point.
Okay. All right. So we got our accounting software. What other software automation recommendations do you have for the audience?
Yeah. So from a banking standpoint, if you have a line of credit or loan, like definitely keep that relationship. If you're looking for a more user-friendly tool, we like to use and recommend what are called neobanks. And neobanks are banks that have no physical location. They're 100% online. So two of the ones we like are Row and Relay, and then there's also Mercury as well. But you don't have to go into a physical branch. If you want to open an account, you can go online and open an account. They also have credit cards associated where you can create virtual cards. So for my team, because we're a remote team, I get all of my team virtual cards, meaning they don't have a physical card, but they have the card number that they can go start spending, and then I can start setting limits and things like that. And then also, if you want to have spin up another bank account, let's say a saving account, or for some specific reason, another location, you can just spin up an account really easily. And then from a automation standpoint, right, we want a good feed that feeds into the accounting software that makes us more efficient. Those ones have for for payroll, if you're under 50 employees, we really like Gusto, very user friendly, has like a full onboarding sequence. You can just need the employee's email address and then they can self onboard. And then
Any opinion on Rippling? That's what me and my team use right now.
yeah, Ripley's good too. That would be, I would say, like our second choice behind Gusto. Um, I just don't always trust the founder of that company, so I don't know.
Okay. All right. Well, move on. What other suggestions do you have?
And then from a spend management, when I say spend management, there's 2 types of spend. There's I get a bill that comes in from a vendor and I need to process it. and run it through accounts payable, get it into my accounting system, right? So you should be looking at, you shouldn't just be paying things as they come in. They should go through a process where they get entered into your accounting system. So you can pull up a list of all of the vendors that you owe and the dollar amount. This is foundational for cash flow planning. So if you want to do any type of cash flow forecast, we need to know who we owe. So that would be like your bill pay process. And for that, we primarily use bill.com. And the other thing I like about that is that you can delegate spend. So right now, there's so much fraud happening uh, in terms of somebody will hack your email or send a spoof email to your accountant and say, hey, can you wire this money? And if your accountant has full access to your bank account, or anybody on your team has full access to your bank account, you might be in a situation where they can wire money out of your account that was fraudulent. So we want to prevent that. And what Bill.com allows us to do is to set up approval policies. So for our clients, what we do is we do all the data entry into Bill.com. And then you, as the owner, once a week will come on and you click a button. You can do it through your phone. So if you're on vacation or whatever, you can do it on your mobile app. You can do it on the computer. You click a button and approve every single bill before it leaves your bank account. So it's very light lift for you, but gives you complete control out of every dollar that leaves your bank account. So that's Bill.com. And then the other side of spend management is I want my employees to spend money on the company's behalf. And I don't want to just give them a card and have them go spend money like our boy Adam did at our client with the Amex, right? Because then they're gonna go look at webcam girls on the internet. We don't want that. We want to set controls around that. So we like Ramp and Divvy. If you want to use like these Ramp and Divvy are a card and an app in one. So, for example, if I go out to lunch, if I use my Ramp card, I I use it, as I'm checking out, I'll get a text that says, "Hey, please upload a receipt and what this was for." So I just respond via text and say, "This was lunch with Clinton, networking." And then that information and the receipt go into the Ramp portal, and then that pushes into QuickBooks Online.
Okay. All right.
Right? So, that's another area where we're setting, and then you could set spend limits. So I could say, "Clinton, you're only allowed to spend at these vendors. You're only allowed to spend $500 a day," or whatever we wanna do. And then we can also say, "Clinton, auto assign that to location A so that it always gets coded to that P&L," right? So those are all things kinda like pre-accounting, I'd call it. As far as job costing goes, we haven't gotten too deep into these, but talking to a partnership with PSA, Albieware is a new one
So
that I've been talking to.
Albie, I had a chance to meet Alex Duda, their CEO, at the last RIA event. We're hopefully going to be having him on as a guest here. I heard nothing but good things. But there's definitely a lot of different software, project costing software out there on the planet. So I would probably venture to say that these restoration companies, when they find one they like, they're pretty loyal, right, to that software because it's there's a learning curve with every single one of them there. So any other suggestions on the software side before we move on to a little bit more about working with you?
The last one I would say is just like reporting. So there's straight out of QBO that you can use. We also have a couple tools. One's called Reach Reporting, and that's more of like a visual reporting tool. And then another one called LiveFlow, which is connecting Google Sheets to QuickBooks Online. So rather than having to log into QuickBooks Online, you can just get those live feeds into Google Sheets.
Okay, good stuff. Now, let's talk a little bit about a restoration company potentially working with you and your team. Um, Mindset for them. Like, let's say they know, hey, my business is not necessarily the healthiest business. I'm making payroll. I'm paying myself a reasonable wage. I don't know that there's a lot of profit coming out of the business there. What are the things that business owner really needs to get a hold of before they even reach out to you and have a conversation with you and your team?
I think it's just understanding their specific challenges. How is that trickling down to you as the owner? And then I've also found sometimes that if there is somebody in that role that the owner's like, "Hey, you're gonna do the bookkeeping," they're actually struggling because the owner has asked them to do something that they don't know how to do, and they feel like they're disappointing the owner, and so sometimes we'll actually get brought in by the owner, but then we start talking to the in-house accountant or bookkeeper, and they're like, "Oh my god, thank you. Like, owners asked me for these reports. I'm also, like, doing HR, and I'm doing IT, and I'm doing all these thousands of other things, and I'm stressed out because I can't achieve the results that he's asked me for." So I would say, like, if you know the details of it, I'm happy to talk to you, and even better if you have that transparent conversations with whoever's managing in-house, because we can probably help like, we're here to support you, not necessarily take over your job, like, we want you to spend the most, like, highest value of what you're able to do, and then we can come in and fill in the gaps. And the other thing I'll say is we'll look at everything for free, like, it doesn't hurt to just have us look at everything and give you, our assessment of what we would recommend. Because a lot of times, like, until we look under the hood, we're like that one client that we're working with, restoration company, they had no idea that the partner was stealing the ex-business partner had stolen from them, right? So now we're going back 2 other years, and you just don't know till we get in there.
So not every one of our audience members has a seven-figure restoration company yet. So do you have any quick pieces of advice for, let's say, a newer restoration company that just wants to make sure that they're being financially savvy, or are there any best practices for those guys just to make sure they're starting off on good footing?
Yeah, I would say, like, on a monthly basis, at a minimum, review your financials, comb through all of your expenses, make sure you're not spending money where you shouldn't be. And then on a weekly basis, look at your accounts receivable, your accounts payable, and cash. And then finally, if make sure that you're looking at your even if you're doing it on an Excel spreadsheet or Google Sheet, at your margin by job, because that'll help you understand your business model and understand where there's gaps as you start to scale. So those are the 3 areas that I look, and I would say, like, even for us, we're happy to start on, like, a lighter level, like, our minimum's, like, $1,000 a month. So we scale up, at if you're small, we wanna support you while you're small and then scale up with you. So I love letter package.
So no matter what level you're at, you have to realize you don't have to do all of this on your own, right? You don't have to become a subject matter expert in accounting in order to run and scale a successful restoration company. So we're hoping to provide our audience with a great resource today. Nikole, if I'm a restoration company and I'm listening to this podcast and I want to reach out to you and Momentum, what's the best way for us to get in contact with you?
Yeah, the best way is to send me an email so we can post the link. Let's just go with info@momentumaccounting.com. And I create a lot of content on LinkedIn, YouTube, and my email newsletter. But if you want to find me on LinkedIn, Nikole Mackenzie, and it's Nikole with a K, Nikole. And then I also have a podcast too, which I don't do anymore because we kind of went through all the content, but it's evergreen content. But if you want to learn more about small business finances, it's called Cash Flow Show. And I would go back to the very first one because it builds on itself. It's a little more industry agnostic, but still some good stuff in there.
Like that. Guys, if you're in the truck and driving right now, don't like reach over, try to grab your smartphone and type in all this stuff. I'll make sure to drop a link to Nikole, Momentum Accounting, all of her socials in the show notes. Nikole, it's been an absolute pleasure. There is nothing boring about talking money. So I really appreciate you coming on to the Restoration Pros Unplugged podcast and providing a great deal of value for our audience.
Thanks, Clinton. I appreciate you taking a risk on me.
No, not a risk at all. And I'm looking forward to potentially sending some of our clients your way because I'm sure we got their digital marketing in order, but I'm guessing that
Yeah.
there probably might be some things under the hood that are a little wrong from a financial standpoint. So it doesn't hurt to have a company like yours come in and do some forensic accounting and kind of identify some holes to plug there, right?
Yeah.
And you
Yeah.
never know. You could have an employee that's spending $1 a day on webcam footage. God, I hope not. Uh, all right, Nikole. Well, for our audience, thank you guys for sticking around. I hope you got a lot of value out of today's episode. Again, this is Nikole Mackenzie from Momentum Accounting. I'm going to drop her information in the show notes or the YouTube description. Again, thank you guys for listening. Make sure you share our content. Make sure you follow us on social media. And as always, I ask our audience, I hope you stay busy. I hope you stay safe, and I hope you stay dry. We'll see you with another episode of the Restoration Pros Unplugged podcast next week. Thanks again, Nikole.
Thanks.
Thank you for listening to the Restoration Pros Unplugged podcast. If you like what you heard today, be sure to subscribe, share, and also leave us a 5-star review. We'll be back with more interviews and discussions with restoration industry leaders really soon. In the meantime, if you're a restoration company looking to add more high-value water jobs, you can reach me and my team at waterrestorationmarketing.net. Again, that's waterrestorationmarketing.net. I look forward to hearing from you soon.